I want to kick off the conversation tonight with a little chat about your competitor. Vontobel had their earnings out tonight. And this week posted a 14% rise in adjusted full-year net profit and confirmed increased 2020 targets.
That's right. No, so the results haven't been that well received. I think it's largely a function of the fact that the share price had run up 15% going into earnings.
And when you say that, you mean that the share price kicked off at about minus 4% this morning?
Yeah, minus 4. It's down a little more than 5 now. So it's still up 10% year to date, which is not bad. So expectations had run up a little bit. The dividend per share was 2 Swiss francs and 10 Rappen, as opposed to expectations of 2.5. So that translates into a dividend yield of 3.8 instead of 4.5. And then when you look at the results, operating income was in line, but revenues were a little light, 4% below expectations, but that was offset by better than expected costs.
So what I'm understanding is the picture is not so negative.
No, some of the headline numbers didn't look great, but then when you look more closely, underlying, they looked a little bit better. So, for example, in wealth management, if you adjust for some outflows with the Notenstein acquisition, flows were actually up 6% for 2018 versus a target of 4 to 6%.
But what's true is, though, that banks across the board have been feeling a lot of pressure, especially in terms of stock price.
Yes.
So this seems to be also reflected in what we saw in Vontobel.
Yeah, so banks or financials were one of the worst performing sectors in 2018. January, a bit of a bounce back, just a mean reversion, laggards turning into leaders. I wouldn't read too much into that. The fundamentals are not that great. We've seen results from UBS, from Julius Baer. Today, Vontobel talked about subdued client activity. When you look at interest rates, they're low, so that's not great for net interest income.
Right. Songen, also SocGen, BNB, Paribas, I mean, the list goes on. Like you said, UBS, they also suffered in the fourth quarter. What do you have to do to bring, because obviously this means that investors are either just, they're cautious still, right? They're not putting their money back. They pulled out, there was a pullout, and now they're cautious about re-entering the markets. How do you get their confidence back? How do you rebuild that?
Well, I mean, if you look at all the concerns that market participants are worrying about, it's a US-China trade dispute, Brexit, decelerating growth, the Federal Reserve. I mean, some of those are being resolved. So I think the Fed looks like it's pausing, so that's less of a concern than it was just a month ago.
Sure.
But you need a bit more of economic momentum, leading economic indicators, stabilizing, and not moderating.
Also been downgrading, no?
Exactly.
A lot of them.
Yeah, so as long as that's happening, you're not going to get a steepening of the Euribor curve. And that's not good for net interest income. And net interest income is a big chunk of profitability for European banks.
So the outlook?
It's a little bit subdued. I think Vontobel is right to be a little bit conservative.
Okay, all right. And if we just broaden that out quickly to the wealth management market in general, do you also feel this is the trend, subdued?
Well, wealth management, so there I'm looking at a couple of different drivers. So on the one hand, client activity, and that comes back to what the markets are doing. So you'd think with a bounce back in early this year, activity could potentially pick up a little bit, but it needs to continue. Okay. And then just looking at net new money, are they raising money or are they seeing outflows? And that's different from bank to bank.
Earlier you were talking about the interest rates. Of course, low interest rate environment is also pressure for the banks, right? Because margins get smaller. How do you resolve this?
Yeah, so it depends a little bit upon the mix for each bank. So, of course, interest rates is one driver. We talked about client activity. And then for some of the banks, some of the ones that are reported so far, like UBS, investment banking was a little bit weak. And, of course, they have quite a lot of exposure to equities. They have a strong market share there. And given just all the volatility in the fourth quarter of last year, they took a hit.
And also, to go back to something that I picked up on that your CIO said, just in terms of earnings season in general, Stéphane Monnier, expectations for this earnings season, he said, were so low that a number of companies have been rewarded for doing a little more than delivering. How true is this for Swiss companies?
I think it's true. So year to date or in January, the results, companies some companies traded up, even though the earnings or the outlooks for 2019 were not great. So it's all about expectation management and what the share prices were discounting at the end of last year.
Okay.
But it's beginning to change a little bit, given how well the markets did in January. Now the bar has become a little bit higher for February. So I think you're seeing slightly different reactions to prints than you saw in January.
Do any companies in particular come to mind as you're talking? Swiss companies?
Well, I think Vontobel today is a good example, right? Trading down over 5%. And when you look at the underlying results, they were okay.
Okay. So he also went on to say that earnings season looked more about like a reaction of the end of 2018, as you, I think, also said, rather than a reflection of valuation for 2019. But that what?
No. I mean, I think, so 2018, valuation multiples compressed by approximately 20%. So a lot of these concerns that we talked about were already discounted into share prices heading into this year. Yeah.
Right, exactly. And do you pointing to a 2019 recession? Is that anywhere on your...
No.
It's not on his, that's why I'm asking.
No, not on mine either.
Okay.
All the warning flags are not there yet.
Okay, so it's looking... All right, so just to wrap it up, we've got another earnings out just this evening, Temenos. What do you expect from this?
I mean, they're experiencing great momentum. So middle of last year, they said their results were going to be towards the upper end of the guidance range. Then with third quarter results, they raised the guidance. So they're talking about 12 to 14% revenue growth, including 15 to 20% license growth. So the momentum is there, so I wouldn't expect big surprises. They're going to come out with robust results. But again, coming back to the share price reaction, the stock has run up 18% year to date. It's trading on a 40 times multiple.
Wow.
So I wouldn't read too much into what the share price does tomorrow.
So you're feeling like it's not going to be, but it might also go down.
It's a great company, but if it were to pull back a lot because people are overreacting, maybe the company decides to issue slightly cautious guidance so they can beat it and raise it throughout the year, that would be a buying opportunity.